Here was a position I opened earlier. It was a ringing of the towel. So here we go. I waited for the Williams 100 to get into strong sell mode. Just one second, let me get that thing back. Here it is. It came in, I put in a position for sell. It was only 8 points we risked. Was it 8 points today? No, I think that was the earlier one. This one was 20 points. We risked 20 points. We risked 20 points, and we finally received 20 points around here. But what we did, we closed part of the position. We closed 90% of the position and left the rest to go. And it ran down and closed at 942, which is around here. So it ran a further points, I think it was about 10 points or so, and then stopped out here. So if we didn't move our stop loss in the first place, which was up here, if we had let it run, we could have taken a 10%, 90% as we did, but just removed the stop loss and put it back at the top of where we were in the first place initially. We would still be in this trade right now. We would still be in it. Even though it hits the 10 here, it seems like it went above the 10 slightly. Let's just zoom in on that. Yes, well, I wouldn't say that. It kind of is on the 10 as it normally does. When it hits the 10, it seems like when it hits the 10 and it gives you a rejection of the price, it seems to go in our favor again. The stop was hit, but I was not aware. I just pulled the stop down from 20 to about 35 or so, and it hit the stop before I had a chance to change it. That stop was there when I had the whole position on, but when I changed it to 90 and took 90 out and left 10% of the position in, I failed to be able to change it before it actually hit the stop. It was very quick, so it hit the stop and then it bounced back up. But never mind, we made a profit on that sell-off. But I really wanted to just stay in and see what the market gives us. And if you look again, we could have entered the trade once more, because it pops out here, it pops out here, and then it comes back in. So we could have entered back in here. There, that's where we could have entered. We could have entered there. The stop loss would have been maybe a bit too rich, 35 pips. I'm not sure whether we would have done that, but in theory that's where another opening was. As you can see, it pops out, both of them pop out, and both of them come back in. That's a good sell-off. It's a good sell-off. So it doesn't matter. These things do happen. You as long as you make a profit, it's fine. I'm quite happy with what's happened. These are all tests. This was a test, mind you. In practice, I probably wouldn't have done that, because I would have preferred to see how this Williams came all the way down. I would have preferred for this Williams to enter around the same time, but it entered way before. And when it enters way before, it usually doesn't give you that much in terms of pippage. It doesn't give you that much pippage, maybe 1-to-1 ratios. But now it seems like it wanted to move further. So it's a really, you never know, isn't it? But anyway, good show.